now. And you've all seen the disclaimer on that. Right, a couple of just bits of housekeeping and biographies. So my name is Conrad Hall, as I said. I'm the Director of Resources at the London Borough of Newham here, Section 151 officer. I've been here for 3 years and doing roles at this level for about 10 years or so in total. And I've chaired the CIPFA LASAAC Code Board for I think 2 or 3 years now. Before that, I chaired the Local Authority Accounting Panel. Sarah Sheen, who's going to lead the main presentation on this, is CIPFA's Standard Setting Manager. And she specialises in standard setting, particularly in local government, but she has worked all across the public sector and indeed for the public benefit SORPs as well. Sarah provides the technical advice for the CIPFA LASAAC Code Board, leads on the infrastructure asset reporting issue, and is the contract manager also for CIPFA's contract on the charity SORP. So she's got huge experience in the space of public sector financial reporting, particularly in local authorities and on the capital finance framework as well. She currently also leads on CIPFA's response to the Redden Review and local audit, and leads CIPFA's work on the Charity and Public Benefit Entities Forum. And before working for CIPFA, Sarah was the national lead for PwC as Senior Technical Manager and was seconded to the Welsh Government, where she took forward the local authorities' capital finance and accounting regulations and the statutory guidance on local government investments. And prior to that, she's also worked in a number of roles for a major local authority in Wales. Alison Bonathan is a more recent addition to the CIPFA team, joined the policy and technical team as technical manager in 2021. Prior to that, she worked for 14 years in professional training and accounting education, where she specialised in the delivery of audit and financial reporting courses. She qualified while working in public sector audit in Liverpool, where she worked on internal and external audit engagements across local government, health and education sectors. So that's us. In a moment, Sarah will do a short presentation, about 20 minutes, so that we've got plenty of space for questions and answers. A couple of housekeeping points, because we're online. I don't need to do all the fire safety and turning your phones off thing, but let me do emphasise, of course, we want questions and observations. That's the point of these sessions. Do bear in mind, though, that when we come to the formal consultation on this, although outreach events like this, I hope are really, really useful. We've got a number of people on the call for that. Do remember also to submit your formal responses to that, because that can be really helpful. Please don't use the raise hands function, because I probably won't be able to see you. And please put your questions in the Q&A box, not the chat. And then Alice and I will collate those and we'll commit to answering as many as we possibly can in the time available. If there are any logistical problems, please put them in the chat, and then Fiona will help to sort that out. The one other thing I should say before I hand over to Sarah, obviously the significant, certainly one of the most significant issues in local authorities at the moment, certainly on the financial reporting side, is the highways network infrastructure asset, which I know is a significant concern to many, if not all of you. It is to me too, in terms of my own authority. We're not talking about that today for the very good reason that the discussions are still going on, urgently and at the highest level between CIPFA LASAAC, between FAB as the sort of Treasury Committee into which we report. So please rest assured, there's no lack of effort to try and find a way through the current impasse that I know is frustrating for so many of you, but we don't have a resolution to that yet, so I can't update you on that. And there is plenty also in the 23-24 code that we do need to talk to you about and make sure that people are aware of. So, the fact that I'd like to exclude that from this webinar, please don't take that as any indication that the issue isn't being treated seriously. I can assure you it is being treated extremely seriously. I've given up a lot of time to it personally, as well as I know many colleagues on the call have too, and many colleagues elsewhere as well. But if we can handle the webinar that way today, that would be really helpful. I think that's all I needed to say by way of introduction. I'm just going to pause for a moment in case Sarah, Alison or Fiona want to say anything by way of housekeeping or introduction that I should raise. Not seeing anything. We're up to 211 participants, so that's terrific. In that case, Sarah, can I hand over to you, please? I hope everybody can see the slides up on screen. Sarah.
Brilliant. Thank you very much, Conrad. That's really, really useful. And what I'm going to do today is just talk very, very quickly through the topics in the presentation. And can I just mention, underline what Conrad said, it really is important that we have consultation responses, and the consultations on the CIPFA website on the consultations page, and the return email address is there. The consultation will close on the 14th of October, but we'd be very, very grateful for any responses that you have. It is really important. We do need that feedback to make sure that we're getting the changes right in the code and for future code. So I'm going to talk very quickly about the changes to the code. And I can tell you why I can talk about that quickly, because we are looking at a stable platform. I'm then going to talk very, very briefly at something that's not the 23-24 code, but it is in the consultation. It's about accounting for insurance contracts. And then I'm going to spend a short time talking about CIPFA LASAAC strategic plan, which is looking at the future direction for future codes and the things that we need to do, and financial reporting more generally. As Conrad said, we're not going to talk in any detail about infrastructure assets, but we do have a slide just to confirm the current position, that the code changes currently being considered, and they're focusing on gross cost and cumulative depreciation, removing that disclosure for infrastructure assets. CIPFA LASAAC has approved that, and that's currently being considered by FRAB. That doesn't resolve all the issues for the infrastructure assets issue, and so we are looking at talking to government around the issues of statutory prescription, and we are discussing that with government. Statutory provisions are already available in Scotland, and we will issue guidance to assist local authorities. But as Conrad said, it's not the subject of this webinar. But to help you, just to make sure you've got the latest information, the urgent consultation on infrastructure assets, if you need any reminders on the issues that are involved, that's linked in the slides. And also the CIPFA statement. That CIPFA statement said we hope to be complete by mid-September. We're probably not going to make mid-September because these processes do take a long time and they are very complex, as Conrad said. And so it's probably more likely by early October, but we are committing huge resources to that at CIPFA, and colleagues and volunteers on CIPFA LASAAC and other parts of CIPFA's due process are looking at that as well. But moving on to what we're going to discuss in this presentation, we're going to discuss that I mentioned earlier on, that we're going to have a stable platform to this code and not introduce too many changes if we can avoid it. I've got a copy of the code there, but that's the 22-23 code, but we haven't got the front cover to the 23-24 code yet. But just as a reminder what we're talking about. So looking at infrastructure assets, there's probably impact on the 23-24 year, although we are looking at dates on how long it will take for us to get through the temporary solution. But at the moment, we're looking at 23-24. We're looking then at the changes of the 23-24 code itself. That's the annual update on standards, then legislative changes and the strategic plan. So those are things that are in the consultation, apart from the second little arrow box. So following the crisis in local audit and the issues relating to infrastructure assets, and to be consistent with the decisions on the delay to the mandatory implementation of IFRS 16, CIPFA LASAAC has considered that it is necessary to ensure the code presents as stable a platform as possible, so that local authority accounts preparers and other stakeholders avoid additional resource pressures on the local audit framework. It would be counterintuitive after the two urgent and emergency consultations to actually make further structural significant changes to the code. So subject to the infrastructure asset solutions, the code will only be subject to those changes that are absolutely necessary. The consultation will raise issues relating to CIPFA LASAAC strategic plan from 22 to 25, although those changes will, if there are any that need to be made to the 23-24 code, it will only be those that are absolutely necessary that we take forward. So one which is actually useful as well as necessary and one of the reasons why we're putting it through is that it will be useful for you in terms of looking at making sure that only the key messages of the financial statements are brought through, is the changes that ISB has introduced because of for accounting estimates, amendments to IAS 8, accounting policies changes, and accounting estimates and errors. So the changes to IAS 8 are to ensure that, or to assist entities to distinguish between accounting policies and accounting estimates. So the amendments from the standard are effective from accounting periods on and begin as the 1st of April, January 2023, so that will affect the 23-24 code, subject to it being endorsed by the UK Endorsement Board. So the changes are such that accounting estimates definition is replaced with the definition of accounting estimates. The new definition describes accounting estimates as monetary amounts in financial statements that are subject to measurement uncertainty. It also clarifies that accounting estimates are developed if accounting policies require items to be measured in a way which involves measurement uncertainty. A change in accounting estimates is clarified that the results from new information or new developments, that's not the correction of an error. The effects of a change in input or a measurement technique are changes in estimation, provided they do not result from a correction in prior periods of a prior period error. So in addition to the change in accounting estimate, it clarifies that an accounting estimate will only affect the current period of profit or loss, so CIS for local authorities, and the current and future periods. The effect of a change in the current period is recognised in profit or loss, or the CIS, in the current period or in future periods relevant. So accounting estimates are forward-looking, and you're not going to be looking at PPAs for that, and it confirms that that's the case. So changes to IS1, presentations of financial statements. What is being changed here is again going to be helpful for ensuring that the key messages of the financial statements, that of your financial performance, financial position, and your cash flows are properly presented. So instead of, so this change was again issued in earlier by the ISB, and it will have the same effective date as the preceding amendment. So that's so it's periods beginning on or after the 1st of January 2023. So the following amendments are included. So there's a requirement to disclose not significant accounting policies now, but an entity's material accounting policy information. So there's a clarification that accounting policies information may be material because of its nature, even if the related amounts are immaterial. And there's a clarification that accounting policy information is material if the users of the financial statements would need to understand other material information in the financial statements. There's also confirmation that an entity discloses, if an entity decides, or if an authority decides to disclose immaterial accounting policy information, and this is really important, and it will emphasize that we're only looking at material information, is that such information must not obscure material accounting policy information. So additional provisions are included in IS1 to explain how an authority can identify material accounting policies information, and we've amended those to make sure that they're in accordance with standard local authority circumstances. So there are lots of technical changes, and I won't go into the detail of these technical changes. Deferred tax relating to assets and liabilities arising from a single transaction, so that's amendments to IS 12. Those will probably only affect group accounts transactions, and reference to the conceptual framework for amendments to IFRS 3 business combinations. That we should have probably put that through last year, but the information wasn't released in time for us to get into the code. And I don't think it's a very technical change. It probably won't affect most local authority transactions. So IFRS 17 insurance contracts, I said I would mention that, and that's quite important for sort of housekeeping reasons, and to make sure that we get the IFRS 17 treatment right for local authorities. We don't think it has a major impact on local authorities, and we've actually, to make sure about that, we've consulted on the last 3 code ITCs on this issue. So currently the code treats IFRS 4 as a standard that has limited application to local authorities. We think that that's how IFRS 17 should be applied going forward. We understand that the rest of the public sector, because of various reasons, will implement from 25-26, with early adoption allowed subject to consideration on a case-by-case basis. We're not suggesting, because of our stable platform, that we introduce the standard early, but we are suggesting that we've given an exposure draft of this is how we anticipate adopting the code, adopting IFRS 17 when we need to adopt it on a public sector basis in 25-26. So if anybody's got any insurance contracts, please look at the exposure draft and give us some commentary on that issue. For legislative changes, the accounts and audit regulations, I'm sure everybody's aware of those, the changes for 21-22 and the changes now from 22-23 onwards, i.e. the September 30th date. We've got that into the code just to flag up those dates have changed. Also the changes to fair value gains and losses on pooled investments in England and Wales. I'm sure colleagues on the delegates on the webinar will be aware that the IFRS 9 consultation is out at the moment. Now, the provisions in the code are adopt what's reflected in both the English and Welsh regulations, and will need to be amended because they're time limited, and they will need to be amended subject to the changes that will emanate from the consultation that DLUC are currently undertaking, and subject to changes that Welsh Government might want to do as well. So we've got a separate account in the code for that, and we will need to remove that as soon as the legislative provisions for the fair value gains and losses are removed. Similarly, and I know this is not an easy issue generally for local authorities, but in accounting terms, it's a little easier, not much, but a little easier. The dedicated schools grant provisions and the need to set up a separate reserve for a deficit account was in place for 2021, 21-22 and 22-23. And it says that a local authority shall establish an account and put the deficit in that account. Now, clearly that's running out, and therefore there's a separate account again established for the purposes. And I understand DLUC are consulting with local authorities in England about the impact of those changes. So we will need to reflect either the end of those legislative changes or anything else that comes to pass. So quickly looking at CIPFA LASAAC's strategic plan, what we intend to do is as outlined in this slide, we're looking at setting up, or the FRUB has a nascent form already, and we're looking at that body communicating with CIPFA LASAAC, but looking at streamlining the main messages in the financial statements and making sure that accounts clearly present those. We're looking at narrative reporting, that's on and sustainability reporting, and changes to the format and structure of the code. I've already mentioned the annual development program, the 23-24 code, and insurance contracts. We're also looking at horizon scanning, and that will be a dual approach of both CIPFA LASAAC and CIPFA's Accounting and Financial Reporting Forum to avoid the need for any further urgent or consultations, and to avoid, hopefully, issues such as infrastructure assets. Can never guarantee that these things are not going to arise, but they have been not the best thing for standard setting. So I've already talked about FRUB and the streamlining workshop that's taking place. We're looking at things like the accounts, statutory presentation, particularly the collection fund. And we're also looking at a post-implementation review of narrative reporting, and consider whether the performance in the narrative report can contribute to streamlining. So we may make recommendations resulting from the post-implementation review regarding further guidance. But I think all those three elements working together should help in terms of communicating the key messages of local authority financial statements. I would say, in terms of the FRUB, I would be very, very keen for local authority stakeholders to actually input into those questions in the consultation paper of how they think the work of the FRUB can help improving the key messages. So in terms of sustainability reporting, you've been sent this as delegates, so I won't go into this in too much detail, but there's a lot of work and activity on sustainability reporting across the UK. The ISB is a new standard setting board created to look at it. They've issued a consultation, and at the same time, the International Public Sector Accounting Standards Board launched their international consultation on it. But what does that mean for sustainability reporting for local government? As I'm sure you're all aware, the code does not include separate sustainability reporting requirements currently. But sustainability reporting is pervasive in all, well, it's pervasive to generally to us all as individuals, but also for public services across the UK. So what we'll be looking at is looking at the work of the ISB and IPSASB and looking what's appropriate for local authorities and the role of the narrative report. We'll look at demand for information and the speed at which we need new information to report on wider issues and the impact of local authority finances. What the consultation does point out, though, is that some sustainability reporting could or should already be included. I'm not suggesting that all the bullets that we've got there, the organisation overview, governance, operational model, risks and opportunities, strategy and resource allocation should each include a bit on sustainability reporting. I think that would make your sustainability reporting quite difficult to read. But, you know, all those things are elements where, you know, clearly the external environment will be impacted on by the sustainability reporting. The operational model, risks and opportunities, the risks to local authorities of the environment are key. And strategy and resource allocation are also important. So moving on to the impact of financial statements and in terms of what's happening currently. This was put into the consultation just to indicate, and I'll let you look at the detail at your leisure, but just to indicate that this is probably already impacting on the things that you're putting in your financial statements. There'll be new additions, or there'll be impairments, certainly because of climate change events. There might be potential impairment due to regulatory changes, that if you've not actually had a chance to change your buildings or other items of property, plant and equipment because of environmental changes. Flood defences themselves may become impaired, or there might be new adaptations for environmental impacts, energy saving additions, and those will all come under IS 16. There'll be new risks reported and it will affect, say, the current or fair value measurement of your assets as well. IS 37 there are already things like regulatory changes, and for example, that's one of the examples in IS 37 about regulatory changes impacting on what needs to be provided for. But I think that's going to be more regular and more onerous. And of course, environmental issues may impact on current obligations. One which you might want to keep an eye on is policy commitments. In a very careful way, though, if you create a valid expectation as a part of those, that you will discharge those responsibilities in policy commitments on environmental issues, subject to meeting the requirements of IS 39, you may create an obligating event. So I'm sure you're already aware of that. Generally, accounting would do that, but I think it's going to become more pervasive and more regular for you as finance people to be looking at that. And then finally, we want the code to take us forward as a modern code to support both the high quality financial reporting in line with CIPFA's objectives. And again, these are on the slide, so I won't go into these in any detail, but because CIPFA is looking at what electronic delivery might mean, this is a good opportunity to review the code itself and ensure that it's still meeting your needs as users. So I won't go into any detail, but it makes sure it's the principal source of local government finance reporting. It's structured well, easily accessible, continues to properly identify where the local government circumstances differ, and identifies all the reporting requirements across the UK. So CIPFA LASAAC would very much welcome your input on whether these objectives are right, whether there should be more objectives, et cetera, et cetera. So at that point, I think I've not gone too far over 20 minutes, maybe 2 minutes over, Conrad, very huge apologies. But hopefully you find that useful. I'm going to stop sharing, but we look forward to your questions.
I think you're absolutely bang on 20 minutes, Sarah.
Cool.
So thank you very much for that. Perfectly timed as ever. Right, I can see some questions in the Q&A, so I'm going to sort of take those not quite in the order that they're posted, because I'll just want to do a slightly different ordering of them, I think. So can we just get a confirmation first on, this is Maria Wilcox, read the ANA regs. Can we just confirm the dates for 22, 23 and 23 for the publication of draft and audited accounts for everybody? Just
it's not draft accounts, but
is there a proposal to change it? Is
no,
Maria's specific question? They're
already out there. The accounts audit regulations, they're on the legislation.gov.uk website. The unaudited accounts publication date, that hasn't changed. That's still the 31st of May.
Yep.
And the September date is the 30th of September for the next following 6 years. But those are confirmed in the accounts and audit regs.
Yeah, that's what we just wanted to get clear. So that's an answer to your question there, Maria. And then there's a couple of questions on FRS 17, which I suspect, so I can direct to you. So Sean Allen asks, can you give us an example of where IFRS 17 would impact a local authority? And Tina Jones add to that, it would help to explain what the changes affect. I suspect part of the answer to that is we've struggled to find many examples where that might be the case, but perhaps Sarah, I could hand those over to you.
It is very difficult because I can't think of many occasions that they say examples might be where pensions guarantees have been issued. There are some literal insurance arrangements where they are undertaking things that very much are described as insurance contracts. There is, for example, there's a mutual insurance body. Now, I don't know whether it's a local government body. Other than that, I'm not aware of anything that absolutely clearly meets the definition of an insurance contract in local authorities.
So I think really the position is, clearly, as ever, one needs to look at one's own arrangements, but certainly our working assumption, this is not a standard that's going to impact many local authorities. But if you do have, I think I was aware of one arrangement of kind of collective insurance arrangements that might trigger this as a, for instance. But we believe it's a standard that's not likely to deal with us.
It may be in amongst a transaction. That's why I say the pension guarantee is not an absolute case, but and the way you do a pension guarantee might meet the definition of. And I know that some authorities have certainly treated them as under IFRS form.
A couple of other short questions, and then there's some wider ones on the sort of accounts and audit and complexity and so on issues, but. Anonymous, I'm sure, well, anyway, I don't know who this is from, but I wonder if the objectives, the structure of the code should also cover group accounts. I do think that's a point that's worth considering, Sarah, isn't it? Because increasingly local authorities have more extensive group accounts and group structures than was the case, say, 10 or even 5 years ago.
Yeah, I mean, the code does already include group accounts and it has a separate chapter on it. So yes, indeed, it does. Whether it needs to be more widely featured, that's something certainly the Financial Reporting Hub are looking at how group accounts interact. So we'll bring those two together.
Which brings me perfectly on to the next question. Again, I'm not sure who this is from, but it says, is it possible to get involved in the Financial Reporting Hub? To which the answer, I'm sure, is absolutely yes, please do. But perhaps, Sarah, you could just say a little bit more about how people do that. Oh, Alison says that she'd like to answer this question live. Go ahead, Alison.
No, that was just a quote from the list. Apologies, Conrad. I will hand over to Sarah.
You can answer if you like, Alison, don't mind. If you email policy.technical@cipfa.org, then I'm more than happy to look at that applications. We are still looking at the terms of reference for that group, but please do volunteer for that. And if you give some idea of your experience, we can look at that.
But, absolutely.
Should I say that slowly?
No. I think
technical. Has everybody got that?
Perhaps we could put that up. Can we actually type answers to these? Could we put that up there so that everyone can see it? Or else email it around to the delegates? I think we've got a list of all the delegates.
As you go on with the next question, I shall put it on a little slide and share the screen shortly.
Super, thanks, Alison.
Lovely. Thank you.
And then another very specific question, are there any proposals to make the narrative report content in Wales to become statutory as per England, given the sustainability reporting requirements coming up?
Oh, I'm not quite sure whether that would be the Welsh Government that will make that decision in terms of that. I'm not quite sure what you're referring to in terms of, I know they are looking at, I did spot something the other day around Welsh Government's work on sustainability reporting. So they might be doing that. They haven't consulted with us in formal terms about how that might happen yet.
So I think it's fair to say that sustainability reporting is a developing area of the statements, probably a really, really significant one, and that standard setters and governments will be looking at that. The specific answer to the question is that we don't believe that there are any such proposals at this point in time, on the very specific point you make, Mary, but I mean, we don't know where that's going to end up. It is a developing area, and you know, do watch this space for all the material that starts coming out on that. Now, I want to move on to a set of questions about the sort of accounts and audit regime, and I think I'll just read them out collectively, and then we'll start sort of discussing them, because you know, although they're all phrased in different ways, they clearly relate to the same point. So, what move is there to respond to issues raised under the Redmond Review on reducing the complexity of accounts? That's one. And then on the sort of linked point with the auditors, Sarah Slater asks, how do the dates for the accounts bode with the fact that the auditors are missing deadlines? I suspect if there are people from audit firms on the call, they may say that it's by no means entirely an audit issue, but let's park that debate for now. And so it adds as an example, you know, and we are aware of places where this is the case, they still haven't got a date for their 21-22 audit, which usually happens in June each year. So clearly that, I can understand why that would be a concern for you, Sarah. And then from S. Kauzar, I hope I pronounced that properly. What can we expect from an external audit perspective, even with a minimum change to the code in light of current issues with regards to delays and inconsistency of approach being taken? And then one last question here, and then I'll invite some responses to it and move on. What move is there to respond to issues raised under the Redmond Review on reducing the complexity of the accounts? I think that's a rephrasing of one of the other questions we've had, actually. So there's a set of related questions there about the complexity of the accounts, the Redmond Review, and the perception that the audit process just isn't working to time as it ought to be. I don't know, Sarah, do you want to start on those? And I'm then more than happy to chip in my thoughts if that's helpful.
Yeah, I will. I've written an article, and hopefully it'll be coming out soon, about complexity of local authority accounts. We sit in as public sector entities in amongst an IFRS-based world, and so there's complexity inherent in IFRS. I don't think that everything is absolutely perfect in code, but in terms of financial reporting, it actually does what it needs to do. And the accounts aren't more complex than they were in 2017-18. IFRS 9 was introduced, but I don't think that introduced significantly more complexity. And so I'm not sure that it's absolutely the code's issue and the delays. That's not to say that we sit, Conrad and I and Alison, sit on our laurels and think that everything's perfectly okay. It's one of the reasons why we are going to be working very strongly with the Financial Reporting Hub, looking at streamlining and looking at the best way to present local authority financial statements. But local authorities are complex, multifunctional entities that deal with very complex transactions. And so I don't think there's a way of saying that we're going to get accounts down to 10 pages like the good old days. So one, I don't think they're more complex than many of the other entities in the public sector. That's not to say things are not perfect, and we have got an improvement agenda which we're looking at. And we're looking at things like the area where complexity might be, but I don't think but I think it delivers what it needs to do largely for local authorities. It is that there are adjustments, but those adjustments are absolutely necessary to, not all of them, but largely necessary to demonstrate the difference between local authority performance against council tax and IFRS-based information. And the rest of the public sector does that as well. They have a complex statement where they present that information. It's called the statement of, oh, I've forgotten what it is. It's called the SOPs, but it actually brings together budgetary information and actual reporting. So that I'm not saying there's things that we can't do. There is always improvement as standard setters. There are things, but I don't think that anything we do, bearing in mind the code's not significantly more complex than it was previously, that will absolutely reduce the resources required to produce a set of accounts. Streamlining can help, but I don't think that the massive changes can be made because we produce IFRS-based accounts like the rest of the public sector.
Thanks for that. So let me add a couple of my own thoughts to that, and I had probably better emphasise that I'm speaking now very much, my own personal capacity rather than as chair of the CIPFA LASAAC Code Board. Although I hope that everyone will recognise these sentiments, even if you don't necessarily agree with each of them. First thing to say, I mean, perhaps on a hopefully slightly lighter note, I mean, one of the issues I think to do with local authority accounts is the number of different users of them. If you think about a company's accounts, it's very, very clear that their primary purpose is for investors or potential investors and so on, and they're tailored accordingly. Local authority accounts, as we all know, are for residents, they're for councillors, they're for Parliament, they might be for banks, they might be for contractor, and the list goes on. And I sometimes sort of joke that every time I try and find one part of the accounts that we could perhaps do without, someone sort of jumps up and says, but that's the one bit that I'm really interested in. And so I think there is something about the length of them being a little bit of a function of serving so many different purposes. On a slightly more serious note about that, and again, this is not, as Sarah says, is not to say that everything in the local authority financial statements is perfect. I think everyone recognises that they are problematic in many respects. I do though want to sort of stick up for IFRS a bit, and there is an element of saying that if you want your accounts to be simple, aside from all the good things that many of you will already have done about sort of looking at presentation and decluttering and streamlining all the rest of it, one way of making your accounts simple is to not do complex transactions. But we do complex transactions for very very good reasons. I know that some of them, some local authorities may have got those wrong. But in the vast majority of cases, people are trying to do things in order to maximise value for their local taxpayers, and sometimes that does involve complex arrangements, PFI contracts, perhaps unusual structuring of financial deals for very, very good reasons rather than just sort of financial engineering for its own sake, and many other issues as well. And indeed, just the sheer scale of operations. Those of you who work for unitary authorities, certainly, which is a space that I'm familiar with, those are very, very often similar in scale to say a FTSE 250 company. Counties I know are larger in scale in many respects. And although district councils are smaller entities, they're still nonetheless very, very substantial organisations. So a degree of complexity, I think, is just also inherent in that scale of operation. But I do want to make a plea for us sort of embracing complexity. There's lots of information that we produce in the accounts that is actually really, really valuable, even though you don't use it in day-to-day decision making. It is information that we and others as finance professionals ought to want to know and understand. On Redmond, I'm a strong advocate for his basic thesis that if you produced some sort of summary of the statements, and of course it's not straightforward to agree what should be in and not in that statement, but if you had that, and critically that was audited, because that gives the public reassurance that they're being told the straight up truth, I think that makes a huge difference, because then some of the complexity in the accounts that's to do with how they're presented and the difficulty of explaining these complex things almost sort of falls away. You could take out a lot of some of the statutory adjustments, for example, and just have very not very straightforward, sort of unadulterated IFRS-based accounts that would necessarily be complex, but that would be okay because you would have a good summary of it that was audited. So I do think the basic approach in Redmond is absolutely the right one. Coming on to the audit delays, and I should emphasise here as well, although I absolutely recognise that many people do feel very, very strongly about the way that the PSA arrangements have worked. I do think it is important to emphasise that the delays we're seeing in the sector, the solution to those lies in a collective approach rather than local authorities saying it's the auditor's fault, auditors saying it's the regulator's fault, and so on and so on and so on, and the circle goes round. So we do need to work collectively to resolve that. I know that the PSA, the results of their next procurement are not quite finalised yet. You'll have all seen the press releases on that, but they're very substantially done so. And I'm sure that they have been looking hard as part of that about how to try and make sure that some of the concerns that have been raised over the last year or two on that are addressed in it. But some of these issues are sort of wider across the sector. I'm going to pause at that point on that one. I don't know if Sarah or other colleagues want to add to what I've said there, and I'll also have a look at the Q&A to see if there's anything else.
While you're looking,
yeah, Sarah, go ahead, please.
I think that was very, very useful commentary, Conrad, and in line with certainly my own thoughts, but certainly in line with the direction, particularly. Although we don't want to add to the work, summary financial statements could be a good inroad into local authority accounts and have many benefits. And I think one of the things that I've said, I certainly said to CIPFA LASAAC, is that you as accountants spend a lot of time producing very useful information. You produce information around the performance of services, the performance of the resources of the authority as a whole. You produce information around, the capital finance responsibilities that you undertake. You produce information around the liabilities that your authority will have to face from now till however long, for example, for pensions liabilities. That information will affect the resources of your authority from now to goodness knows how long. And therefore, I think, complexity, or at least the usefulness of that information, shouldn't be underestimated, and certainly should be underlined. And what we're hoping to do with the Financial Reporting Hub is to increase positiveness about that useful information. We don't like the term streamlining. It's making sure that the right information is there to present transactions and statements clearly to the users of the financial statements. And hopefully you'll be able to use that information in various outputs for things like talking to your partnerships, etc., etc. And I'm sure that you do have examples of that within your own authorities.
Okay, let's pull out some of the other questions on this theme. There are a few others on other points that I don't want to lose, and with 15 minutes left, but let me just go through them, and then Alice and Fiona, if you wouldn't mind sort of shifting them to the answered section just to help me in the chairing of this. So someone contributes the auditor issues affecting all aspects of public sector audit, e.g. health. I think that's a sort of factual statement rather than a question that need answering, but I agree with it. It's not just a local authority one. Tina Jones asks, deliberately provocatively, I imagine, Tina, to meet the 31st of May deadline, what do you expect local authorities to stop doing that they're doing now? And there was another one in a similar vein. Yes, why does the draft accounts publication date stay at 31st of May when the final has moved to 30th of September? It's a lot of pressure on finance staff. And I suppose what's behind that question is it's still 6 months from the year end to get the final statements, but instead of that being split 3 for the draft and 3 for the audit, it's now 2 and 4. I'm going to guess that's what's behind those questions. And I don't think anyone would dispute that these these deadlines are challenging. I suppose the response, Tina, and it's by no means a perfect response. I will, too, at my own authority will struggle with 31st of May, but it is the same amount of work, just in a shorter space of time. And the other point to make on there I think there's a real value in having this task out of the way. I mean, I can't say I sort of endorse the approach that some authorities went down, a few years ago, and almost sort of turning this into a race to see who could get them done in a couple of days after the year end or something like that, each to their own. But it wasn't, my personal preference. But I do think there is an important principle of financial reporting. It's written into the standards, isn't it? About timeliness being a kind of key factor, and getting this information out there. So indeed having the task done and going on and doing other things, like working on your budget for next year, working out how to cut costs, all those other things, a million and one other things that finance departments do. So there is some advantage in having the task done. But no one would dispute that 31st of May is a challenging date. I don't think I can really comment on the sort of 2 and 4 as opposed to 3 and 3 split.
Of course, it's a decision the government made, and
yeah.
and I think they made commentary. I think they made commentary on it in their when they just made the decision. So I'll leave
Perhaps
that
that could be
yourself.
circulated, Sarah, if we can find that.
I'll see if I can find
it. Might just be helpful. That'd be helpful if that could be circulated. And Alan Smith also asked, and I think this is a good question, any thought as to whether they'll be joined up thinking with some of the forms councils are being asked to complete, for example, RO, RA and QRO forms? And I do think that's a good point, isn't it? That there's, sort of wealth of data often cut in 2 or 3 different ways that does add a burden in terms of producing it. So I think that's a good point. I don't know if Sarah's anything you can say on that one, but I think it's a good point that I wouldn't want to lose.
Again, the ROs and RAs, although they work with our CIRCOP publication, they are under the auspices of government departments. And I think the theory is the information in the account should feed easily into the ROs and RAs, but I don't think it's as easy as that.
There is some liaison with, it's got this wonderful name, is it CIPFA or something like that?
That's the one. There is a group that we
stats
feed into.
department that sort of collates these things. So I mean, it's not as though we've just said, oh well, never mind, government produces it in that format and we just have to do it. We do try and liaise with them to balance their needs and our reporting requirements.
We do, absolutely. We don't abdicate responsibility entirely, but I think they are supposed to be aligned. The information should be able to be easily downloadable. I think it might be also functionality of your accounting systems would hopefully be able to have 2 reporting formats, i.e. the CIRCOP format and the RO, and however you produce your own segmental analysis, for example. So that probably will make life easier for yourselves. And although I haven't seen the financial system recently, I'm sure they're getting more and more adept at doing that.
Okay, I want to move on. This audit issue is a huge one, but probably not one that we're going to resolve on this call. I note the comment that someone's made about, is it realistic to expect 30th of September to be hit, given the backlog of 2021 and indeed 21-22? I think one could certainly say that it's challenging, and people can see the comments made in there about the challenge of 31st of May, frustration with PSAA, others on there as well. I mean, I don't disagree with that. Clearly people, there are some very strong feelings on those. I don't really want to get into that on this webinar now. I do think, perhaps CIPFA colleagues could take away, because there's clearly a strong feeling in the sector on there. Whether some different format webinar, to actually focus on those and hear a range of views on that might not be an event that colleagues would also find helpful. I am conscious, though, in terms of chairing it, 1, that I've got at most 10 minutes left, 2, that some people have been waiting patiently for answers to their questions on other areas. So, from Anonymous, it would be good to see more guidance on group accounts, especially with regard to the treatment of joint ventures and partnerships. Sarah, do you want to expand on that? Because I mean, that is a subtle but important distinction between subsidiaries, the way we ordinarily think of groups, and other arrangements. So is there anything you can add to that?
I know that I know it was last issued in 2015. The group accounts guidance as accounting for collaboration is our most it's the central guidance on group accounts. And that did have a new section that did introduce a section that looked very particularly at partnerships and very particularly on the new joint arrangements, because that was expanded with an introduction of IFRS 11 at the time. I mean, the same email address that Alison's going to put up at the end, you know, if there are particular aspects you think more guidance is needed on, then, you know, please let us know. But also, the consultation of the code will allow you to actually put those lists in, and there's a question at the end, any areas of further guidance, that will be the place to put it. So there was expanded guidance the last time we issued the publication, so it'd be interested to know where or particular transactions we think aren't covered in that.
Okay. And then someone also asked, going back to the financial reporting hub for a moment, does its scope extend to the example financial statements in the guidance notes? Sarah?
Yes, indeed.
Yep. And a point made about change in audit approach and emphasis, for example, PPE valuations, FRS 17, etc. I mean, I think, you know, there clearly has been a change in the audit approach and emphasis on that. And indeed the regulatory requirements placed on the audit firms for that. I'm going to pause.
Can I comment very briefly on that?
Well, in a moment, Sarah, just while Sarah's commenting on that one, because I hope I've managed to make sure that every question has been answered, but there's always the risk that I haven't. So if your question hasn't been answered, could you sort of repost it in the chat now as Sarah's speaking, and then we've got a couple of minutes at the end and I'll try and pick it up just to make sure we've covered everything. Sarah?
Obviously, we did a survey the year before last, and that was the start of things changing on property, plant, equipment, and I think infrastructure assets is a part of that debate. One of the things which CIPFA is commenting on tomorrow is the issue of materiality in auditing, and there is a new practice note 10 consultations taking place, and that practice note 10 does look at materiality and very particularly looks at the issue of dual materiality, which might impact on things like the measurement of property, plant, and equipment, because it is materiality that is one of the key things. There's risk as well, but materiality is one of the key things that might help with that balance. We can't say it will absolutely resolve everything, but we will be responding to practice note 10 tomorrow, and we're hoping that that will at least help to shift the dial a bit.
Thank you, Sarah. And it's actually a new point, but a helpful one nonetheless. Don't know who it's from, but I'll just read it out. Is there an expected timing for the decision, possibly mean a decision, on the statutory override for pooled investments? Current override is due to expire on 31st of March 23. Decision may need authorities to change their investment mix to suit their approach, and so on and so on. Now, clearly, I can't talk for the new Secretary of State, but I'm fairly sure that that will be reasonably high on his in-tray. I don't know if there's anything else that CIPFA colleagues can say on that. Clearly, it is a matter for government, not CIPFA.
Yeah, I other than what's in the consultation document, I don't know anything more about timing. But clearly, it will need to apply for following the date of the current statutory instrument if it's going to change.
And what thoughts are there on the consultation for extended capital returns required during the close down period?
Not quite sure what that means.
It was for anonymous, so I can't be quite sure myself. I know there is consultation on more capital returns there, and so I presume this is government concern about sort of borrowing and so on, and related matters. So if you want to pick that one up, I mean, I think the point will be made in the response to the consultation about needing to balance the importance of timely information with not just sort of asking for everything at the same time in the year.
That was addressed by PAC, and PAC were very clear the government needed more information on this. And so that's, I believe, part of the response. Can't talk very specifically, but PAC were very clear that following the report on commercial investments, and I think it's come up in other issues as well, that government needed more information. So they have quite rightly responded to PAC on that. Although clearly it needs to be tempered with the, you know, not being overly onerous at the same time.
I have to add, speaking personally and possibly slightly controversially for a moment, I'm not sure that a statistical return is necessarily going to capture all of the information government wants there, and I do wonder if that's also to do with the sort of the nature of the relationship with the auditor, and indeed the nature of the audit engagement, if government's concern is to keep an eye on investments or other financial transactions that they consider risky. Last one, Akram Rizvi. Hello, Akram. Nice to see you again. Is there a feeling that the reliability and consistency of the RA and ROs has lessened somewhat since the CIS stopped reporting on the CIRCOP service basis?
I've not heard any absolute feedback on that, but it wouldn't surprise me if that was the case, because it has less importance and less consistency. And even though accounting systems can do what we've just mentioned, it is much easier if it's on the face of the accounts clearly.
So that was a decluttering and simplifying point, wasn't it?
That it was very much responding to local authorities' desire to actually reflect their structures rather than a standardized structure.
Which I personally agreed with.
Yeah, absolutely. Yeah. But you know, with all these things, which is why we do the consultation, there are consequences, and sometimes they're unintended consequences, but that is a consequence.
Perhaps we can finish with, and I'm not going to invite a response except for everyone to think about it, but I do think it's a super point, so I think it's worth reading out from Oliver Sims. What can we all do to encourage government to use the accounts for the information they need rather than request lots of separate returns? I really do think that's a fantastic point, and one that we should all think about and indeed discuss where we have the opportunity with decision makers in government too.
Well done, Oliver.
I'm going to draw it to a close there. Got 2 minutes left, which gives me just the opportunity to thank, first of all, Sarah, Alison and Fiona for the presentation materials and the really efficient organisation of this. Fiona's put up her own contact details there and the policy technical email address. So if you want to get involved, and please do get involved with the Financial Reporting Hub, that's the contacts. Also to thank all of you. I hope it has been really useful. It's difficult, of course, doing this online, because you can't see you all to see whether you're intrigued or looking bored or whatever. But I hope you found it useful. We had something like 200, I think 210 at top attending. Which does tell me that we've got this right to do these sort of short, sharp, more focused webinars. Seem to me popular with members, so we'll keep up the format. If you do have any other suggestions for changes to the format for these technical ones, or indeed other subjects that you think would be helpful to tackle this way, and the audit one might be an obvious example of that, again, do let CIPFA know, because I think it does really help with the outreach material. That done, I'm going to draw things to a close. Thanks to all of you. Good luck in finalising your accounts if you're there, or moving that one along. And indeed, with all of the really challenging financial issues that we're going to have to manage over the next few months, I'm sure we'll start getting a bit more clarity on local government funding and related issues from government now that a cabinet has formed in the period of mourning. Once that's out of the way, I'm sure there'll be announcements aplenty. Thank you all very much, and good evening. Bye.
Thanks very much.
Thank you.
Bye all.
Thank you. Thank you. Bye.